Hello and welcome to episode number 28 of Zach's Tech Talk Tuesday. My name is Ryan McQueeney, and on this week's show, we will be returning to our conversation about certain risks within the cryptocurrency market that we picked up last week. Today, we are actually joined by Mick Sherman. Mick is currently the CEO and co-founder of Hercules Technologies, a New York-based data company that analyzes sentiment, network, and trade data to better understand how markets change based on breaking news and other effects. Hercules Technologies is also a specialist in blockchain analysis, and Mick himself is a recognized expert in the cryptocurrency space. I was lucky enough to talk to Mick about the difficulty in determining value in cryptocurrencies, the dangers that come with trading these assets, the benefits that they could one day pose in the financial services industry, and much more. I hope you enjoy. Here at Zacks, we tend to focus on equity research. Our strategists are always trying to find opportunities for growth and value in the stock market, and we tend to turn to a variety of tried and true strategies for finding these opportunities. From PE ratios to earnings estimates and revenue forecasts, company guidance, or technical analysis, there are plenty of methods to go around. But with cryptocurrencies, determining value seems a bit more difficult. How do you approach the process of determining how much something like a Bitcoin is worth?
So I think to answer that question, you need to break down how to value any commodity or really any asset. So there's utility value, and then there's a speculative component. And so in the case of cryptocurrencies, I think everybody would agree that the speculative component has really shined. And over the first couple of years of this market really turning into something, the speculative aspect of this market, people speculating on, is really what's driven the prices versus utility. Utility, of course, meaning how often something, an asset, is used. So in the case of Bitcoin, let's say, which I think is probably the most simple example, how much are people actually using Bitcoin to purchase goods? So are merchants accepting it? Is it being used whether for remittance, or are people storing it for value? Rather than it simply just being traded, is it actually being used? That would be an example of the utility value of Bitcoin. And then the speculative value would be what is the maximum potential future utility value. So in the case of Bitcoin, what I think people will oftentimes say and tell you, if you ask them this question, is that because it's tapping into potentially the gold market and becoming some kind of digital gold, that since that's a $7 trillion market, that's the maximum speculative aspect for Bitcoin. And then people also use remittance, which I think is probably a better example, which is a $1 trillion market. So basically sending money back home, the fact that Western Union takes several weeks to be able to send money back home to an unbanked relative, for example, and it's a very costly process. So with Bitcoin, assuming that there is some floor, there is some store of value, that sending it, since it's cheaper and it's faster, that would be true utility. So right now, that is $8 trillion of potential. But how much of that has actually been tapped into, it's very difficult to say. You mentioned PE ratios. I think the most similar type of ratio that I've heard in Bitcoin's case is called the NVT ratio, which is the network value to transactions ratio. Don't need to get it's a pretty technical process, and to be honest with you, it's not something that anybody would agree it fully works yet. But that is something that would be similar when trying to understand how much these networks are used and what the capacities are and things of that nature, would be another way to actually get pretty granular with understanding how much these assets are being used and therefore what its utility value is.
It's interesting to see those kind of metrics start to crop up now as we look for ways to value these things. And I do want to get to more on the utility value of cryptocurrencies a little bit later on. But for now, I want to touch on some of that kind of speculative trading that you were talking about. We've obviously seen some massive swings in the cryptocurrency market lately. Those who jumped on Bitcoin at the 20K high might regret that decision right now, but there are plenty of traders who have really been able to cash in on these swings in cryptocurrency. Plenty of money to be made out there, but still, there seems to be an insane amount of risk here. What do you view as the biggest dangers to trading cryptos right now?
Sure, good question. So I would say, and I'll probably elaborate on each of these, but just to categorize, probably volatility, regulatory risk, and risk of hacks. So starting with volatility, this market, until there's more fundamentals behind the market capitalization of the assets, I don't think that the market will be stable, meaning it will be volatile. It could mean that it runs up like it did in November, December. It could mean that it has a correction like it did over the last couple months. But the volatility definitely seems like it will continue over the next year or so until sophisticated market makers come in, until getting back, we'll get to the regulatory aspect, until that's a little more solidified. And so, that's definitely a risk. If somebody, like you mentioned, people who jumped in at 20,000, they've lost a lot of money as a percentage. And that's very scary to investors. So I think, obviously, what I always tell people, and what I see a lot of other people saying as well, is just put what you're willing to lose, and then you've got nothing to worry about. But don't expect for that volatility to change and become a lot more the market to become a lot more efficient anytime soon, at least in my mind. And then the second one, regulatory risk, which I could probably elaborate on a little more, but just kind of the high level is just, countries can anytime change their mind about crypto, and they could, at any time view it as an attack on their banking systems. I think that if they have more data to support that it's taking away from the efficiency of their fiat markets, that could be a risk, certainly. But the bottom line is the government could do whatever they want at any time, and that could affect things. And then lastly, the hacks on exchanges. We recently saw the biggest hack of all time, at over 500 million on a Japanese exchange. The bottom line is that the exchanges themselves, a lot of them are not insured. They're not really overseen by the government in most scenarios. And so that's something that you'd expect as the technology advances, that their infrastructure would advance as well. But certainly where we are right now, just mere weeks after the biggest hack in history, that certainly needs to be a risk that's taken into consideration.
Okay, cool. So moving back to really something that you were touching on before, so the utility value of these cryptocurrencies. It seems like at the end of the day, this whole market is at least supposed to be grounded in the belief that this technology could really shake up the financial industry with its ability to decentralize certain transactions. Do you think any cryptocurrencies or the underlying blockchain technology will actually ever get to that point?
So certainly, I think that they'll get there. I think it may take several years. I just, to compare it to something that we all have better understanding of, because we saw the beginning, the middle, and the end when the internet came into fruition. In the early 1990s, it wasn't ready to scale for massive adoption. And also, people didn't know about it and didn't understand it. But if they did understand it, and if, I guess the biggest difference is that the early 90s the internet was kind of whispered about. It wasn't talked about nearly as much as crypto is in its early years. The reason being that crypto, unlike the internet, gives people an opportunity to actually be able to trade on the protocol layer, and therefore potentially make a lot of money, like people did last year, and lose a lot of money like they did early this year. And so I think it's always good to compare to the internet, because we were able to see a full cycle of how something like this ended up happening. But in the early 1990s, the internet was not in any position to have millions of users on applications, and blockchain, all the more so, is not ready because it's decentralized, which means that there are new scaling issues that wouldn't have applied to the internet in the 90s that do apply to blockchain. In Bitcoin's case, it's very secure, as we all know, but I think everyone started to see that it takes a lot more time to be able to process Bitcoin transactions than it used to. The mempool is oftentimes clogged up and it doesn't look great. And so I think that, yes, absolutely, that there will be utility, there will be usage, there will be crypto assets that are used frequently in a few years. But the scalability issue on the blockchain layer itself is something that first would need to be solved. And the fact that you have the greatest minds and the greatest scientists in the world trying to solve these issues and getting somewhere, there's new things come out, but not completely, I think is something that everybody needs to look at before we start to see massive adoption.
And as kind of a quick aside here, drawing that internet comparison, which I think is a good comparison in some ways, and a good way for especially an experienced investor to kind of look at the situation. It seems like, especially from the investing perspective, Of course, the dot-com bubble burst really helped investors, whether it be big Wall Street people or just the average investor, the average retail investor. Seemed like that kind of crash helped the overall market learn a lot about the mistakes that were made there, the mistakes in valuations, and then through that we kind of found our level over time. What will it take for cryptocurrencies to get there? Is it going to be a big crash like that? Is it going to be these scientists and these thinkers coming in and applying the technology in different ways? Is it just going to take time? How do these things how do you see this playing out?
Sure. I think it's a great question. I would say that after the most recent correction from about an $830 billion market capitalization to at its low around, I think, 300, and right now decent floor at about a little over 400 billion, I think that people are starting to understand that this is not just about making money. In fact, that really at this point in time needs to take a backseat to what's more important. And what's more important is that this technology and the infrastructure surrounding it continuing to advance. And part of that has to do with the actual crypto markets themselves and the fact that the exchanges, I think, have long ways to go before they're ready for the type of adoption that we started to see. I mean, you're seeing exchanges get hacked. You're seeing exchanges that are very slow. So the actual market infrastructure certainly, but then the blockchain infrastructure, more importantly, as I started to allude to earlier, people understanding that it is more important that this technology works well than that we all make than we make money from it. And so people can make investments that don't necessarily have the same type of risk reward as investing in a really appealing new ICO potentially, but investing their time, if they're technical people, to actually, you can be a developer on any one of these coins, even if you're just learning what's going on. And you can certainly talk to the developers if you're not technical. And I'm not super technical, but I've had a chance to speak to some of these developers on the coins and just ask them what are the issues they're seeing, what type of infrastructure they need before they're comfortable with the scalability and before they feel like they have a really solid foundation. That, I think, needs to be the focus of education and research right now, as opposed to the crypto markets themselves.
Awesome. And as we start to wrap up here, I want to touch on something that I think we scratched the surface on earlier. And you know what, quite honestly, we could probably do another show just focused on this issue in and of itself. And maybe we will someday. But I just want to talk about the threat of regulation. Regulatory risk has obviously been talked about a lot in this market. I think over the past few weeks, we've heard everything from China cracking down on miners to South Korea debating an outright ban on cryptocurrency trading. Realistically, what kind of power do governments have here, and what might be the single biggest regulatory concern for cryptocurrency bulls right now?
It's a great question. So I would say that you started to say a lot of this stuff, but governments can make trading Bitcoin extremely difficult. And a good example, that's China, right? I mean, that has caused a number of market corrections or crashes over the last couple of years every time they make a statement, even though right now their trading volume is actually very low. And just, I encourage people to look at data when you start selling off because China has bad news. You should probably, take a peek and see exactly how much Bitcoin or crypto is being traded in China. Right now it's a very small percentage, and so it really shouldn't have that much of a market impact. And then Korea, like you mentioned, South Korea, they've been very iffy. We actually have a small office over there. I have employees in South Korea, and we try to stay aware of exactly what's happening as they're the number 2 market. And I personally, based on what I've heard and what I've read, I think that they're gonna regulate cautiously rather than an outright ban. But they're figuring out the best way to do that. And then in the U.S.'s case, it seems like they're going to regulate and not ban as well. And I think for anybody who watched the hearing last week, my big takeaway, and just to also tie in and answer your last point, is that the SEC, specifically with regard to ICOs, it does not seem like it's clear cut what they're going to do there. I don't know. I encourage everybody, if you didn't watch the interview to watch Senator Elizabeth Warren asking Jay Clayton on the last question of the interview, of the hearing, was were people making mistakes with the way that they were trading on behalf of others with regards to ICOs. So if you specifically invested in an ICO, you're probably okay. But if you invested on behalf of others, you really needed to. There are strict securities laws that I don't think anybody properly, figured out and spoke to lawyers about. And there was a lot of blame on the legal side, which I'm not sure if it's warranted or not. But to hear the SEC continuously, if there was one warning, it was that the lawyers in the space who are helping people out with SEC law or ICO law, they really need to do a better job being forthcoming with their clients in a lot of cases. And conversely, with the CFTC, which is really what we tend to look at more on the commodity side, the larger coins that would be considered crypto commodities rather than crypto securities, I think that there's much less risk with regard to crypto commodities than there are with crypto securities. And I think that the hearing is proof of that.
Awesome. Well, I just want to thank you one more time for coming on. Really interesting insight. And definitely, we discuss this on the show. We discuss cryptocurrencies here and there on the show when news pops up. But it's definitely nice for our listeners to get a little bit more insight as opposed to just coverage of the breaking news. And hopefully we've all learned something today. I certainly have. So thanks for joining us. And we hope to have you on again soon.
My pleasure, Ryan. Thanks again for having me.
Thanks again to Mick for joining us. Again, his company is Hercules Technologies. Check him out if you want more info on what they do. As a reminder, if you feel that we missed anything, or if you want us to cover a different story, or if you want me to have Mick back on at some point to talk more cryptocurrency, please shoot us an email at podcast@zacks.com. Make sure to check out all of our other audio content at zacks.com/podcasts. And remember to subscribe and leave us a rating on Apple Podcasts. As always, guys, thank you for listening to the Zacks Tech Talk Tuesday show. We will see you next time.